What's going on, traders? If you're watching this video right now, then you are watching history unfold right before your eyes. This is the first time ever that oil prices have gone negative. We're going to explain how that all happened and a few scenarios you can take advantage of to make some money from it. So we'll look at some charts in just a bit, but just a quick overview of how prices did go negative. You can see here that they did reach an all-time low of negative $37 per barrel. It's been all over the news. You can see these headlines asking free oil. Well, no, that's not quite the case. You can't just go fill up your car. And, you know, headlines all over the place. You can see people are blaming the US ETF USO. People are calling this a wipeout. You name it, it's been in the headlines. People are calling it a disaster. And yeah, no one really wants to offer up a clear explanation as to why, but more importantly, no one wants to offer up how you can take advantage of this to make some money. So we're going to go ahead and do those two things. We're not going to spend too much time on the boring part here, but just know that obviously in an economic state, you have supply and demand. Those two things allow goods to be traded back and forth. When supply is really high and demand is really low, price is therefore reflected as low because there's a ton of the product and there's not very many people who want it. Therefore, it's not very valuable. Price is low. In the opposite case, supply is low. Therefore, the product is rare. A lot of people want it. There's a high demand. Therefore, you get prices increased because it's seen as a valuable product. So that's the simple kind of how we got to where we are. Of course, we are sitting up here where price is really low because there's a high supply and low demand. But why did it go negative? That is because these two players here are essentially controlling the price of oil. You have the suppliers and the buyers, right? And the suppliers create the oil, so yep, they got all the oil. But the buyers over here, because of our good old friend down here, the coronavirus, people are staying inside, people are not traveling, goods are not moving back and forth as they normally are. And don't just think it's just commuters going back and forth in their cars. Think planes, think trains, cargo, freight, you name it. Not as much petroleum is being burnt as it used to be burnt. So therefore, you know, there's not a huge demand. And again, we can all thank the coronavirus for this pandemic. So the suppliers are sitting on a huge amount of oil, and basically all you need to know is that it costs money to store all this oil. You can't just sit on it. You can't drill it out of the ground and just let it, you know, leak all over the place. You got to store it in barrels. You got to store it in big ships. That way you can move it around the world. It costs money to store the oil. And essentially what happened is suppliers found out that, you know, it's actually worth paying the buyers that $37 per barrel to take this stuff off of our hands so we can keep our operation running and not have to shut down and lose money in that sense. So they are still taking a loss, don't get me wrong, but it would be less of a loss than completely shutting down the operation, going bankrupt. And right now they're just kind of trying to get rid of that oversupply that they have. But with all that being said, let's look at some charts and look at how we can take advantage of this situation. Alrighty, getting right into our charts now. We're going to start off by looking at crude futures, and I want to preface this whole video by saying I am not an oil trader. There are some people who live, eat, and breathe oil trading. I am not one of them, so I'm not pretending to be an expert here. I just see an opportunity, and I'm trying to take advantage of it, and I want to let you guys know what I'm thinking. So on CL, you can see in the past, we have some pretty historic basing down here. Between the mid-80s and just about 2000. You can see that price essentially went sideways and really just bounced off of this key support zone in here plenty of times. So that support zone sort of starts at $11 per barrel here, and from there we go up, and we're looking at $13.75. Our next historic support is the first pullback after this big move, and that comes down into $17.33. So really what I'm looking at is this huge overextended move to the downside right into a very historic support zone. You can see, boom, very nasty candle. And obviously this is all catalyzed by the coronavirus. So when we're coming into such a historic support, I could at least expect some sort of bounce to happen here. So going from the monthly to the daily now, you can see this downtrend is still intact, but we do have these set of flat lows here where we have it almost a double bottom. It looks like we might want to retest based on this large red candle and sort of doji forming here. So again, if we can break down below this 1950 level just about, I'm looking to be a buyer in a few different instruments anywhere when CL is under 1733. And of course, from there, we're looking for a move back up to our resistance trend line. sort of forming a pressure cooker where we have all these tests of the trend line. The next one, or next few anyways, especially coming down into support, should break that to the upside, in which case we're looking for a move back up to our high here at $35 just about on CL. And obviously from there remains a huge gap in the chart to the upside, closing all the way up here at $41.30. So there's plenty of risk versus reward going on here. You can see if we're being a buyer down here, we want to stop out anywhere under 11 just about, and looking to profit all the way up here to 41.30 in the best case scenario. That's got to be at least a 2-to-1, 3-to-1 risk versus reward trade at least. So because we're not going to trade CL exactly, we have a few tickers to look at here. The first one going to be DBO. So the first two we're going to look at, which are DBO, and the next one is going to be USL, track some longer term oil futures. So don't be worried about, essentially time running out here on your contracts. Essentially what we're looking at is, we have higher lows forming. We're starting to form a bit of an uptrend here on DBO, but of course with the, it tracking oil, I wouldn't be surprised to see it continue to come down a little bit into our sort of low of the move here. So we're looking to be a buyer anywhere at $5.79 or lower to our $5.50 mark down here. And then we're stopping out anywhere lower than our low of the move here at $5.31. So if you want to play it safe, maybe you give yourself enough wiggle room all the way to $5.15 or something like that. Just enough room where you're not going to get wicked out on any sort of move to the downside here. But again, picking up shares here, very tight risk to reward, where we have a stop out down here, and we're looking to target, again, a break of our downtrend resistance line coming up to our bottom of the gap here at $6.98, $7 just about. And then from there going higher to fill the gap to $8 almost. So plenty of risk to reward. And again, that's what we're focusing on here. I'm not trying to be an oil expert or anything. I just see an opportunity and I want to tell you guys about it. Same thing is going on here on USL. You can see, again, higher lows starting to form, but we do have lower highs continuing to maintain on track. So if we do something like this, we get almost a symmetrical triangle. But again, looking to be a buyer anywhere around this $12 mark and lower than that down to $11.24. And we're going to stop out, again, anything under $11.05. USL to me is a little bit more attractive just because I like the numbers here. I would think that $11, the whole number there, would provide some support. So it would be nice to have a stop loss on the other side of that, somewhere, around 10.65 or somewhere around there. And then again, looking to target some of our highs in here, our major one being up here at 15.34, and from there looking to fill the gap all the way up to $17 just about. Our last ticker is USO, the one that apparently caused all this havoc. And you can see this is a much shorter term trading contract here. So this one tracks a much shorter term contract, which is why we see the lower low forming here on USO, and everything else has those higher lows starting to form. So because of that, this one, again, shorter term trade, I would probably on this one only be looking for a move to come into our resistance trend line and then sort of monitor for continuation there. I wouldn't be as bullish in looking for a bigger bounce all the way up to our 732 level, or even filling the gap all the way up to 865 just about. So if you're interested in this one, I would wait for more of a signal of reversal. Of course, this isn't a very good reversal candle. We have a huge upper wick, big red volume, of course. So I wouldn't be just hopping in this one right away. I would sort of wait. If you do want to trade this one, wait for, again, maybe a hammer or something to form somewhere down here around the lows, and then look for a move back into our resistance trend line. From there, if you really want to continue to hold through that and monitor for continuation, maybe you're looking for that bigger bounce but don't want to trade the USL or DBO, I would look to target this $6 mark somewhere around here, where we did have resistance come into play on this first little dead cat bounce. Alrighty guys, so that's going to wrap up this video. Again, these are just my thoughts on the opportunity that I'm seeing. I'm not claiming to be an oil expert or anything like that, but it's kind of, it's one of those things where it's like, oil's not going anywhere fast. When things start to reopen and the virus settles down, I'm sure there will be a nice bounce in the price of oil as, it's going to be in demand again. So all going back to supply and demand in the end. I think this is a great place to be picking up some shares with tight risk and a pretty good potential profit target to the upside. So that being said, if you enjoyed the video or are glad you found this little analysis, be sure to leave the video a thumbs up and let me know down below in the comments section. We also do a weekly watch list on Saturdays where we go over some options that could be in play up here on our watch list. We have SPY, the Qs, and IWM, Apple, Netflix, Tesla, Alibaba, Facebook, Nvidia, and Microsoft, and also Amazon. So if you're interested in that, feel free to check out those videos. Again, those come out on Saturdays. We have a Instagram and live Discord server and a free newsletter that goes out as well. All that stuff's linked down below in the description. So check it out, and I wish you a green trading week.